The intelligent investor is a realist, who sells to optimists, and buys from pessimists. In the short run, the market is a voting machine, but in the long run, it is a weighing machine. An investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Operations not meeting these requirements are speculative. Those who do not remember the past are condemned to repeat it. But investing isn't about beating others at their game. It's about controlling yourself at your own game. The stock investor is neither right or wrong because others agreed or disagreed with him. He is right because his facts and analysis are right. People who invest make money for themselves. People who speculate make money for their brokers. Buy cheap and sell dear. Invest only if you would be comfortable owning a stock, even if you had no way of knowing its daily share price. On the other hand, investing is a unique kind of casino, one where you cannot lose in the end, so long as you play only by the rules that put the odds squarely in your favor. A stock is not just a ticker symbol, or an electronic blip, it is an ownership interest in an actual business, with an underlying value that does not depend on its share price. You will be much more in control, if you realize how much you are not in control. Abnormally good, or abnormally bad conditions do not last forever. The investment world nevertheless has enough liars, cheaters, and thieves to keep Satan's check-in clerks frantically busy for decades to come. If the reason people invest is to make money, then in seeking advice they are asking others to tell them how to make money. That idea has some element of naivete. Obvious prospects for physical growth in a business do not translate into obvious profits for investors. While enthusiasm may be necessary for great accomplishments elsewhere, on Wall Street it almost invariably leads to disaster. With every new wave of optimism or pessimism, we are ready to abandon history and time-tested principles, but we cling tenaciously and unquestioningly to our prejudices. Since the profits that companies can earn are finite, the price that investors should be willing to pay for stocks must also be finite. All things excellent are as difficult as they are rare. While a trend shown in the past is a fact, a future trend is only an assumption. Astute observers of corporate balance sheets are often the first to see business deterioration. An elementary requirement for the intelligent investor is an ability to resist the blandishments of salesmen offering new common stock issues during bull markets. Likewise, investors were delighted to earn 11% on bank certificates of deposit in 1980 and are bitterly disappointed to be earning only around 2% in 2003, even though they were losing money after inflation back then, but are keeping up with inflation now. The speculative public is incorrigible. In financial terms, it cannot count beyond 3. Intelligence has nothing to do with IQ or SAT scores. It simply means being patient, disciplined, and eager to learn.